Hey traders, we're diving into the world of LEAPS options. Imagine having the power to control $30,000 worth of stock for about $5,000. Well, that's the magic of LEAPS options. I'll even show you how we can collect about $1,000 per month in income every month and basically control those option contracts for free within about 6 months. In this short video, I'm going to go through 3 LEAPS options trades that will supercharge your portfolio for 2025. So whether you're a seasoned trader or just beginning, buckle up and get ready. Let's get started. Please remember to hit like and subscribe down below and download the free options workshop. It talks about the main benefits of trading options over buying stocks. LEAPS options, otherwise known as long-term equity anticipation securities, are similar to short-term options. However, it's kind of like options on steroids. LEAPS are different though because they've got longer term expiration dates. I like to go about 9 months to a year out in time. And why do that? Well, the time decay doesn't eat away because we're buying options. So we want that time decay to go slow. And with that 9-month time frame to a year, it goes much slower. Now, the unique benefits of LEAPS options are you can control a huge amount of stock for very little capital. So they're very capital efficient. Now, they also limit your risk because on the downside, the most you can lose is the amount that you paid for the LEAPS option contract. Now, when selecting your LEAPS option contract, it's crucial to select the right contract and consider several factors. Expiration time frame. Opting for LEAPS with 9 months to a year until expiration can be an effective strategy. This time frame provides a balance between allowing your investment thesis to play out and managing time decay at the same time. So contracts with that 9 to 12 months expiration still qualify as LEAPS and offer the sufficient time for significant movements while avoiding the higher premiums of even longer dated options. Strike price selection is based on your outlook and risk tolerance. For bullish positions, consider slightly in the money calls or deep in the money to balance the cost and potential returns. These offer a higher delta. So I like to go 65 deltas or greater, and they behave more like the stock ownership. And then lastly, the underlying asset quality. You want to focus on stocks with strong fundamentals and potential for growth over the next year. Look for assets with a history of steady performance or catalysts that could drive price appreciation quickly. By the way, if you'd like to receive the free options strategies trading guide, please comment options guide down below and I'll send you the link. Now guys, besides just buying the LEAPS option contracts, we can do something else. We can combine it with another strategy. We can sell calls against the LEAPS options contracts. Those make the trade a poor man's covered call. So like a covered call, but actually it's more capital efficient. With a poor man's covered call, what you do is you buy a deep in the money LEAPS call option, typically with a delta of 0.65 or higher like we talked about. And then we sell a shorter term out of the money call option against the LEAPS option position. This strategy mimics a traditional covered call but requires less capital than owning the 100 shares of the underlying stock. The poor man covered call allows you to generate income from selling calls while maintaining a long-term upside potential gain. All right, guys, let's take a look at 3 LEAPS option trades that I have on right now, and I highly recommend, although please do your own research. I'm only showing you what I'm doing, so this is not financial advice. But AMD is the first one. If we look at AMD, do your research, but you can see the stock price is down. The RSI down here on the bottom half of this screen is down lower towards the 30 range. And these guys are a leader in AI. So let's go. I'm on the Tasty Trade platform. We punch in AMD right here. There's a link down below. If you haven't checked out Tasty Trade, it's a great option trading platform. Use my link and there's some benefits. I also utilize Moomoo, so check that one out as well. We go to the trade page right here. I'm going to look out about 9 months. I'm going to look at the September. I'm going to click on that right here. These are the option chains. We're on the trade page and table mode. So that now let's click on September 2025, open up the chain, and here's the delta right here. Calls are on the left, puts are on the right. So we're going to look at the calls and we're going to look at the ask, the buy price right here. And we want to go at least 65 delta. I'm going to look at the 71. Actually, let's go right now at the, we're going to look to spend around 2,500 bucks. So we can go to the 64 delta right here, which is the 120, and we can click on the buy right here. Now we're actually going to go to the mid price right here, 24.35. So the price is 24.35 times 100 shares. One option contract controls 100 shares. That's $2,435. We could hit review and send and place the trade. But let's go to the curve mode and analysis right here. And you can see as the stock price moves up in price, we profit. So if we get up to the target, which I have for AMD up around 170, we profit and make $2,500 just in the option contract appreciation alone. So that pays for the option contract alone. But what we are going to do is if we hit review and send, we place that trade. Then after we place that trade, what we're going to do is sell a call against it. That makes it a poor man's covered call. So we go to the February right here. I like to go 30 to 45 days. We're at 59 right now. We could either go January or February, but let's go February. We can go all the way out. And what I'm going to look to do is collect around $350, $400. We can go to the 30 delta right here and we can sell and we get $380 deposited in our account right away. That's $20.48. It brought the cost of the LEAPS down. So $380. Imagine if we make 350 bucks every month, as long as it stays below the 145, so it still gives it 20 points upside. Huge move. We collect that $350. So we hit review and send and place the trade. Now another one I want you to look at, let's clear this out, is SOUN. SOUN. We again on SOUN, I'm going to go out to the January 2026, so even a little further. And I am going to go to the 20 call, and for around $1,000, we will buy that. This is the 74 delta, so still emulates stock ownership. Again, as you see, as we go up in price, we make more money. So there is the call that we're buying. Now what we're going to do is sell against it the February, and we're going to go out and collect around $300. So let's go right here to the 27. This is the actually we're at 20 right now. That's a huge move up. We can actually go to the 28 or even the 29 and collect almost $300. But let's go here and to the 28, sell it. That brings the cost of the LEAPS down to $665. We hit review and send and place the trade. SOUN is an AI monster, and it's a good underlying stock, great fundamentals, just like AMD. Let's look at one more that I'm placing right now, Supermicro, SMCI. Now, Supermicro is way down. They had some accounting errors apparently, but it's proven to not look like much, and they're going to continue to be dominant in AI. The RSI is down. The stock price is below. Looks like the 13-day moving average is getting ready to pass the 50, but it's down below the 200-day moving average. So it's a great stock to go long in right now. So we're going to go to the trade page. Again, we're going to go out to January, and then I'm going to look at the 30 call. Click on the buy, $12.80. So $12.80, and then what we're going to do is sell against that, the February, and we're going to collect about $350. So let's look to collect right here, 345, the 38, and it brings the cost down to 917. So basically what we're doing is we're collecting around 350 per month, and we do this every month. We just roll that call to the next month. So we're collecting 350 on the AMD, we're collecting 300 on the SOUN, and 350 on Super Micro. That's $1,000 a month. And as the stock price increases on each of these, we also make money on the LEAPS option contract as well. And the total cost for these, the Super Micro, actually when you take into the first month's, I'm not going to take in the first month's contract, but we saw what the cost was of these. $12.80 for the Super Micro. Let's look at the AMD. We were looking at September, 120, and we're right around $2,500, $2,465. And for the SOUN, we're about $1,000. So we are spending total on those 3 LEAPS option contracts around $5,000, a little bit less, and we're collecting around $1,000 a month. All right, guys, that's a wrap. We showed how to control $30,000 worth of stock for just $5,000. Be sure and hit like and subscribe down below. Download the free options workshop. Leave a comment, ask a question. I answer every one. Thanks for watching. I'll see you in the next one.